The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good afternoon, boys and girls. Nice to be back after a weekend, and we're looking forward to the big football game tonight where Oregon's going to beat Ohio State by plus 30. And if you believe that, I still have 10 shares of the Brooklyn Bridge. It still should be a very good football game. I don't really follow sports too much, but that ought to be a very good game. They got some fabulous players. But we have fabulous players in the stock market. There's been a big development here in the last 15 minutes, folks. I've seen here on CNBC that Saudi Arabia is going to offer free gasoline to everyone in the U.S. for a year because it's so much under their cost of production. They figure they might as well give it to you free, and that way it'll stimulate more driving to boost up the price of oil. That comes along with Goldman Sachs, with about 5 minutes ago, reduced their price forecast for oil for the year, and that comes as a big surprise. And also at the same time, Bloomberg is reporting that they are looking at the price of oil as pulling down stocks. Well, let me see now. Oil has been straight down since July. It's only had 3 up days in a row, 3 times. Each of them were $4 a barrel since July. It went from 95 to 45. And now they're telling us that that's what caused the sell-off in stocks today. Please give me a break. They must really need something to talk about today if they start doing that. Anyway, I wanted to salute our great benefactor, Priceline Charlie, who's down in Veracruz, Florida, as the price hit the 1025 level that he talked about 2 weeks ago when he came on and talked about shorting in it when it was 1160. And I think that, it's really a tribute to the fellow that he really was on the short side of this. That's one of the real advantages, folks, of working here at TFNN is, boy, there's some smart people that are not only in the Tiger Den, but also to contribute to TFNN from, Tom O'Brien all the way through the whole group. And it's really got some really smart people that are here, and it makes it a lot of fun to learn some things. And of course, I feel the real strong affiliation, of course, with Steve Rhodes, and respect to Basil very much. I try to listen to their shows when I can because I learn so very much with these things. I don't do stocks like Basil does and also Steve, but the patterns are, very interesting, especially when you look at the VIX index and, things like that. So one of the charts that I wanted to talk about, because we've been in a, really bull market here in stocks for quite a while, with that October 15th date being a very strong Bradley date, and then again on December 15th another Bradley date. They were absolute perfect Fibonacci numbers. And then today we've hit a really some important spot in the S&P when it made the low down here at 2015 today. That was a 61% retracement of the low we made back on January the 8th, and that is our 6th, and so that's also a very important a spot to look at. So what we've had now in the stock market is we've had these higher bottoms. One happened on December the 15th when we had a 3 drive to a bottom pattern, and then on January the 8th we had a retracement where the market came down to exactly 786, and then we rallied strongly, just a little above the 61% retracement on Friday, and then today's low was a 61% retracement of that low. So it's still in an uptrend. I mean, it has higher bottoms, and that's how you define, what an uptrend happens to be. So we want to keep a really close eye on that. The first question that someone asked me this morning before the show started was the price of crude oil, and I don't know where the bottom is, nor does anybody else. but we've reached some levels here that, people never thought it would get below 50, and then 49, and then 48, 47, 46. We broke 46 today. We got to 45 and change, and it's been a very, 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 very bearish market for quite some time. However, we did have a pattern today that looks really interesting. If I can just, hopefully I'll be able to get it up here in just a second. Yeah, there we go. Just give me 1 second here, and I'll draw this in so we can see it. We've had a really nice butterfly pattern form over the last 5 trading days. I mean, it might just mean a bounce of a few dollars, but at least it's something that a little bit different than a market that's been going straight down, basically forever. And whether we get much of a rally or not, we'll wait and see. Remember, all of the rallies that we've had in the oil since July have only been $4 to $5 a barrel, and they usually only lasted 2 to 3 days. So the first time we get a rally, and if we do, and we should sometime during that time, that'll be this point where we'll probably get a little bit more of a bounce. But folks, this market has really been damaged, technically, and I believe fundamentally too. So that's another thing that you want to, keep in mind, that these things can really take a long time to, take care of themselves. Now, one of the parts of this question that we had about the bottom potentially in crude oil is that if we look at, the components of crude oil, we are within just a few cents of the exact 786 in the heating oil that goes back to 2009. Now, does that mean that it's going to stop there? No, it didn't stop at 61%, and it doesn't necessarily mean it's going to stop at the 786. However, this goes back a lot farther than 2009. If you go back to look at this, you'll see that this thing has longer bottoms, bottoms that go all the way back to 1998 with higher bottoms. And this could be a very interesting spot where we are right now in the crude oil complex, and also in the gasoline complex, and along with the in the heating oil altogether, because it's all of those are telling us that we've got to be getting, well, we don't have to be, but the technical picture is such that we stretched it out so much. This is the 7th straight down day, lower closes, which is very negative in itself, but usually that's an outlier event. The market will go down to 7 days or 8 days, and then it has its reversal. But that's just a probability, because sometimes it can go 8 or 10 or 12 or 15. We've seen this happen before. But we should be getting close. Now, whether that'll help stocks or not, I don't know, but I don't think stocks need a whole lot of help. I mean, they've held major bottoms in here all along, and that's really what stocks have been doing. So you have to pay attention, to the fact that these markets, even though they've broken, they're still in, pretty strong uptrends. There's no question about that. So that's, what we're looking at. The stocks are certainly strong compared to crude oil. I know that they talk about it, that oil is pulling down stocks, but, oil is pulling itself down. Stocks are going down mainly because stocks are going down. It has nothing to do with oil. I mean, all you have to do is to overlay a chart on oil over the price of stocks, and you'll see since July, oil has been vertical to the downside, and basically stocks have been, pretty much sideways. Because if we look at the New York Stock Exchange Index, which is something that we always do here at TFNN, at least we do on my show, we're going to be able to see that we have had lower tops ever since July with this, and that's really what we did again. On Friday, we rallied up to the 61% retracement of the high that we made back in late December, but you can see these divergences that we've had here. We've never seen this before, folks. This is really a negative thing, because that tells us that the overall broad market is still in big trouble. It's only the 531 stocks, the 30 Dow stocks, the 500 S&P stocks, and the 100 NASDAQ stocks, and some of the NASDAQs are in the S&P. So if you stop the double counting, there's only 531 stocks that have been doing all of this. And of the 531, not all of those have been really strong. It's just been the higher priced ones. So this is really, as Basil would say, a bifurcated market. I'm going to learn what that word is the next time I go up to MIT to visit him, but we'll have to wait and see. One of the questions that we had this morning, had 3 questions. The second one was about the Bradley model. I started to post the Bradley model for 2015. Basically, I do the Bradley model right as the way that Donald Bradley put it in his book. I keep the same weightings of all the planets. Now you'll see on the internet, oh my gosh, when I started doing this Bradley stuff back in the mid 80s, there was, it was 86. There were very few people that even knew what the Bradley model is, and now the folks have taken the Bradley model, and what they do is they give extra weighting to the inner planets. In other words, Mercury, Venus, Mars, and Jupiter, they give, different weightings to it because those are the ones that are closest to the Earth that usually affect it the most, but that's not what Bradley did. Bradley took the work from a man named, his name was Dr. Charles Barr. I believe he was it could be Charles Burr, I'm not sure, but he was at Princeton University, and he had given a electronic weighting of the planets. In other words, their energy factor, whether it was positive or negative, and how it affected the cosmos. And that's what Bradley did, was saying that this would affect the price actions in stocks. And so Bradley used those as his indicator. I don't change anything from what Bradley did. We experimented with this back in 1987 and 1988 with Dr. Ruth Miller, who was one of my teachers, and my good friend Jim Twentyman, and we did a lot of experimentation, but nothing was really better than the plain Bradley model. And it's just a guideline, folks. The Bradley dates are really good, as we already know, but the trend of the thing doesn't always work because it'll invert. So you have to wait till the Bradley date is fulfilling, and then you'll get a chance, to really look at it. The third question that we had for today was, is there a head and shoulders pattern in the Dow Jones Industrial Average? And yes, there is, because we have the first shoulder came in early December. Then we had the sell-off. The head came in on December the 22nd, 23rd, when we made marginal new highs, just like we did in October of 2007. Then we had the breakdown to the 786, which occurred on January the 5th, and then we had a really strong rally over the last 3 days that took us up to the 786, making it the right shoulder, and then right now we've sold off, it's heading down. But if we get much above 17,950 in the Dow today, that would tell us that this head and shoulders pattern is no good, and we could be moving to a much higher level, and that would just make another 3 drive to a top pattern if in fact we do that. The European market that I watch most often is the DAX index, and it is still pretty strong. We got the Dow down about 65. We got S&P down 13, and gold is about unchanged. We'll be right back after these words.
How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high-probability trading setups utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. Subscribers will also gain access to the December 9th workshop with John Logan. There's no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of the Art of Timing the Trade Charts today by visiting TFNN.com.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're back, and as we speak of our exalted leader from Veracruz, Mexico, or La Paz, Mexico, Priceline Charlie, are you there?
Yes, I am. How are you, Larry?
Well, I'm happy, and I'm sure you are too, my friend. This stock has been you've had the nail of this stock all along. So tell me what you think. Where's it going now?
Well, the first thing, I always listen to my emotions, and I don't know if I'm always right about that. That's why I'm calling you. You are the more experienced individual. Let's put it this way. My emotions this morning look at RSI, relative strength, on a 15-minute chart and on a 5-minute chart, and says, boy, this thing is oversold. So I
agree with you. We have been down for 10 days in a row pretty much, other than the one update that we had 3 days ago when we talked last, which was the market was breaking below the 1090 level. We've made a double bottom now, almost exactly where we were back in October. And so I agree with you here. I would certainly take some off the table, if not all of it. You don't see 10 days in a row down very often. And last time we had one of these, it was down 14 days, and then the market rallied 10%. So we matched that low that we had back in October. So I would think that even though we're heading towards 930, I would certainly take some off the table today. You've actually answered your own question, Charlie. Because one of W.D. Grand's favorite rules was, when in doubt, stay out. And so you have a doubt here whether it's the fact that it's so oversold. That's your doubt factor. So that's what you're supposed to do, is you're supposed to take your position off and look at it again. It is going to give you plenty of chances to get back in again. This stock certainly jumps around a lot, but after 10 down days in a row, matching the low from October, I certainly think that this is what I would be doing. That's the bottom line of what I would be watching.
I took 15% off my position, moved it to cash, so if it bounces, I won't be scared as it bounces back up again, because what I shorted, I am now took the money, I'm holding it. And we are testing the October.
We took that out. We took that out by 20 cents, Charlie. That's in a stock that trades at 1,029.83. It took it out by 20 cents. I mean, that's telling you there's got to be somebody wanted to buy some there. I mean, they weren't afraid of those old lows at all. So that's another reason. So I would say 2 red flags: the 10 down days, the fact that we took the bottom from October out with any follow through. So that would be enough for me. I would say you'd have to ring the bell on that one and wait for something else.
I would like to bring something to your attention. You said the other day when I shorted, I was a little concerned that 1090 was going to be the number. And that day you said, and maybe 2 or 3 days, it hit it that day nearly to the pennies. You made a very good call through your Fibonacci calculation. It says 1090. So I'm going to ask you, looking at what you see now, we don't know what's going to happen exactly. Do you see any kind of Fibonacci retracement, a bounce back?
Yeah, it goes right back to 1090 again. That will be the retracement back from this high we made back in late December. Then we came down, made a low today, so the retracement back would take us right up to about somewhere between 1090 and 1100 without any trouble at all, if that's what it's going to do. However, if we close below that 1019 level, this old cowboy's full of baloney, and it's probably going to go a lot lower. But frankly, after a move like that, I would be thankful. You've already got some doubts that are going on. The fact that you've been down 10 days in a row, it's very, very oversold, and we took out the October low. Those are things that first of all, you've been spot on right about this. So you don't want to be thinking you're perfect, and you want to book some profits along the way. And this is where I would certainly be doing it.
Okay, so really long-term, still committed to the 900, short-term, bounce. You say 1090. I think I've learned the way the trading a watch, it may not hit 1090. It may go over it a little bit or may go under it. I don't know. So I think somewhere around,
no one does.
Around 1075, around that number, I think I'll start scaling in and say maybe you can go to 1095, and that should be a plan.
Hey, Charlie, we're going to take a break here. Will you stay with us? I have a question I want to ask you. Do you have time to answer a question for me?
Yeah.
All right, we'll be back after the market comes back. We got the S&P down 12, the Dow down about 60.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're talking with Priceline Charlie from La Paz, Mexico. Charlie, are you still there?
Yes, I am.
Okay, the question that I have for you, your business is dealing in high-grade and high-end construction equipment. Isn't that correct?
Yes.
And you do used equipment. Is that correct?
Yes. What it is, we're building here 2 10-story buildings, and we're acquiring cranes and concrete mixing equipment and other things that you need in the construction, like concrete pumps and so on.
What's the market for that now, soft or hard? I mean, can you buy it cheap, or do you have to pay up for it?
It's very cheap right now. I'm buying international trucks at $9,000 for 2007. I think I mentioned in the past. I'm buying cranes. I'm looking. What it is, right now, the only strong economy was Texas with the oil. Now that area is weakening, and I have a friend who works for the U.S. Treasury, and he works from the Dallas office, and he mentioned that he sees a very big softening in Dallas and in particular Houston. So I'm now preparing the focus in Houston and in Dallas to buy machinery because they're dumping. The Texans are really dumping their machinery. The incredible thing is they thought it was going to be strong, so there are cranes in Arizona that they were planning to sell to market in Dallas, but that market is so soft, my opportunity is going to be on the fringes. I'm looking at a crane, a big crane, I mean a 160-ton crane that would sell for millions in normal times, that can sell for pennies and of dollars because nobody needs it, and it's an expensive machine to keep around.
Mm-hmm. The reason why I asked, Charlie, is the same thing happened in at the bottom in 2009. You know, we had some you know, real clearance sales on some of this stuff, and I was wondering if that was possibly the case here, because, you know, we've had this big boom in stocks, and yet you know, the construction business is slowed down quite a bit. I know that from a personal family experience. I was just questioning, you know, your buying of used equipment, if you were seeing the same thing.
I'm looking at a $50,000 silo that's sitting in Tucson, Arizona. I'm really looking at it. That the beginning of the bid price is going to be $5,000. It's going to be lucky if it gets $10,000 for it. So the buyer,
Wow.
the buyer is going to make immediately $40,000. I picked up concrete forms just 2 weeks ago. They were delivered last week for. Normally, they would sell for maybe around $57,000 to be exact. I picked them up for $15,000 in Dallas.
Wow.
The buyer immediately, I told him, you're making $15,000 on your investment right there and then the moment you buy it. And the client bought it immediately. Flew up there, looked them over, paid for it, and it was shipped to San Diego, and they got into here into La Paz just a little after Christmas.
Wow.
Yes.
Well, listen, my friend, I was hoping that I could talk to you about that today, because someone asked me about it, and I mentioned before that you had told me that the market for trucks was soft, and I was just wondering about the equipment stuff. So thank you for your information.
By the way, in Dallas, Texas.
Go ahead.
In Dallas, Texas, Penske is taking about 15 of their trucks, all internationals, between 2007 and 2010. They're auctioning them. So their transportation is telling me that the business is slowing down and they don't need trucks. And the auction's going to be next month.
Well, let us know how it goes, okay?
Yeah, I'll keep you informed. And by the way, thanks for the information. I really appreciate your help.
All right, Charlie. Happy New Year to you, my friend.
Same to you. And by the way, thanks Tom for this wonderful system that he's put together. I mean, it helps us communicate and work together, and that's really the key. United we stand, divided we fall.
You're right, Charlie. You know, people don't really give him the credit that he deserves, because, you know, he puts things together at such a, you know, really, really fair price to everyone. And the quality of the people that are in the trading room, the Tiger Den, and, you know, the announcers and stuff, you know, really work hard to do their best, and they are very high quality. And boy, it's really been it's been fun doing this for 7 years. But you're right. We should you know, bow to Western Florida every day to thank Tom for what he's done.
By the way, I've been to Tampa. I've been to his offices. I've met Steve also. And at the time where gold was high, and everybody was saying was high, I sold some of the gold through Tom. So it was really nice dealing with him. He did a great job for me.
Well, that's good. Thanks a lot, Charlie, and Happy New Year to you.
Same to you. Take care. Bye.
You bet. Okay, folks, now we're going to take a look at the euro. The euro's been coming down, you know, quite a bit here over the last 7 or 8 weeks, but we've reached a pretty strong support point down here at the 117 level. That's basically the 1.27 move of the last low that we had. On the long-term weekly basis, there is just about no doubt from a technical standpoint that we're heading towards either 113 or 109 in this. We've looked at this many times over the past few weeks, and that's what it shows, that it's going to be where it should be going to. But that doesn't mean we can't get a really substantial rally from this level right here. We'd be looking somewhere up around 121, you know, to 122 in the euro as being something that would be, you know, very, very important. Now we have to spend some time here on the gold market, folks, because we are getting ready, I think, to have a heck of a move to the upside here in gold. Now, the chart that I'm putting in here is the daily chart showing the head and shoulders pattern. It also shows the 135 higher bottom pattern that we talked about that was Roy Longstreet's favorite, legendary soybean trader. But folks, there's been some really important information on gold trading over the weekend. The Chicago Mercantile Exchange announced that they have changed the trading limits on gold out to $100 an ounce. And that, to me, why they're doing that when gold is rather quiet and down at this level is I don't know. I'm very, very surprised. One of my friends thought that gold would be up the limit Sunday night, just given that information, but I don't know. You have to stop and think why. I read that you might go to the CME and Google the new gold specs for trading limits to learn more about it, but they've extended the limits out to $100 an ounce, both on the upside and the downside. So we have these higher bottoms in here. We're still coming off that long-term Fibonacci number at that 1130, 1160 area. So if we can get gold above the 1240 level, it's got a real chance. We hit 1234 last night on Sunday night, not quite above 1240. We're trading around 1230 right now, so it's got a real chance to get through here and have a move at least up to the 1290 area. And above 1290, there's going to be some bells ringing in the old Golden Chapel, because this thing is really going to start to look good if it can get above, say, $1,300 an ounce. It would give a really good indication that we're very, very close. So we'll see. Question arises of whether the gold will drag the Australian dollar down with it. The Australian dollar hasn't had any trouble going down on its own. It's held relatively well in here. We'll take a look at it right here now. But we've bounced off of the 1.618 level and held it so far. So it looks like it's got a chance the Australian could rally. I look at each one separately because you have to trade them separately. I don't trade a spread of gold Australian dollar. I just look at the Australian dollar and then look at gold. But the gold I watch all the time. We're up 1.1% today, holding pretty good. Silver's up 0.70%. So it's acting good. That's all I can say. And with this new information that we're getting out of the CME, you have to ask yourself, what does it really mean? We haven't had a vertical move in gold since was it April of 2011 or 2012. So we've had a downward, sloping market, very, very orderly all the way down till we got down to this 1100 area, and now we're starting to make a turn here to the upside. All I know is, folks, back in the old days, back when Hector was a pup and I was in school with Moses and Abraham Lincoln, but if we had these types of economic things like quantitative easing, gold would be trading at not 3,500, probably at 5,500, because we used to have moves in M1 and M2 that were just like little drops of dew on a car compared to a thunderstorm that we have now. They've just flooded the market with this quantitative easing. Everybody thinks it's the right thing to do. It's a giant experiment, but I still have a sticker on my refrigerator that I've had for 25 years, and said, "He who owns the gold makes the rules." And I think that's where it's going to come down to when push gets to shove, because you just can't keep printing paper like these quantitative easing central banks have been doing to really make a big difference. So that's what my feeling is. This is a giant experiment that when they try to finally work out of it somehow, it's going to be difficult. Remember, the German bonds are now negative. In other words, if you buy a German bond, you have to pay them for the right to own the paper. They're no longer giving that they can buy our notes and bonds, because they're still trading the 10 years at about 1.9 and the 30 years about 3. That's a heck of a return, especially when you're dealing with billions of dollars like many of these hedge funds are doing, and large corporations, and also the central banks themselves. So, well, whether this happens the way we think it's going to or not, I don't know. I just think the outcome is going to surprise a lot of people, whatever it happens to be. That's, the bottom line. And believe me, folks, this down move that we've had today in stocks has absolutely nothing to do with the oil move. Oil has been coming down every week since July. So we're looking at, just about 8 months now. And so it's been, pretty much straight down. And we will get a bounce. Well, maybe not in our lifetime, but we'll have to wait and see. One question that someone just asked me here at the Tiger Den is the price of Apple was still a sale up at that 112 level. Well, it looks like it's a sale right now because, it did hit that level and then came back, quite a bit to see, where we are at that point. Okay, now I wanted to, we're getting close to the end of the show already. Oh my goodness, that's going quick. We wanted to take a look at the Treasury notes and Treasury bonds here, folks, because we'll look at the notes because we have completed a major Gartley pattern here. We're trading up near the 129 level, which completes that pattern. That is a perfect Gartley sell pattern in the Treasury notes. Whether that's going to turn it down or not, I don't know, but this is a very powerful pattern. I just pay attention because this chart is telling us that it looks like we're looking at higher interest rates coming over these next few weeks, and then we will determine, the next level of support or resistance in this. But right now we're at major resistance here in both the bonds and the Treasury notes. That's what we're looking at. Whether that is a mini flight to quality to what we're having in the stock market today or not, I'm not so sure, but all I know is that it's at an area where it's got some major resistance forming at that particular time. Another question that's popped up is where would I exit the gold position as far as being you go from bullish to bearish, and that would be if we get below that 1170 again. That was a 61% retracement. If we get below that, then I would say yes, the gold has had its chance. And it didn't. But boy, it did exactly what it had to do, folks. It held that level at 1170, had a really good rally up to that 1232. It backed off about $15, $16, and now it's going right back up again. So we're getting closer to the breakout, which I believe will come in around 1240. That'll give us a run up to 1290. And then that 1300 will be a major factor because going above 1300 will light up some buy signals across Wall Street, I believe, because people that look at breakouts and things like that, it will give them a real good feeling that the support is in, that we should have a tremendous move in gold if we can get above that $1,300 per ounce level. It's still quite a ways from there. We're roughly $72 away, but as you know, gold can move very fast. I really urge everybody who's a gold trader, especially gold or silver, is to go to the CME.com and read that about the new trading limits. It's quite interesting. We're going to take a little break here. We got the Dow Jones down about 65, and crude oil is down about $1.80 a barrel.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Darrell Martin here on TFNN.
Okay, we're back, folks, and we're going to continue on with the gold comment, because we've had several people ask about the gold, and then they also ask about the gold silver index, which is the XAU. That's the gold mining stocks. And as you can see, we've made that huge double bottom that we had down in 2008. That's when it was hitting the butterfly bottom from 2014 down at the 62 level. We're now about 20% above that, starting to strengthen a little bit. I mean, not a lot, but at least it started in the right direction. This going back to where we are with the gold, if we can get gold above that 1240 level, it will probably look like some of these gold miners are not going to be able to, or they will be able to finally turn around and make a change and maybe make some profits. But that gold silver index looks pretty good right now. It's very similar. The charts between that and the HUI, which is the bull bear index in gold, has also made a major double bottom and has also been rallying. So it's telling us that, you know, the gold, there's some gold bulls that are still out there. I've been trading gold ever since it started to be traded legally back in 1972, and before that, I was doing gold coins and silver coins, so it's always been, you know, part of what I like to look at. It's just nice to have silver and gold coins to hold them in your hand, and it's really quite amazing. I had the great fortune it was about 2 years ago. I happened to be visiting one of my friends that happens to have a fabulous gold collection, and he showed me a coin that there are only 6 of them in the whole world. It's one of the I forget what they call it now. Doggone it, it's right on the tip of my tongue. Old age is creeping up. Anyway, there's only 6 of them. I think it's called the Elizabethan dollar, if I'm not mistaken. But there are only 6 of them in existence. One's in the Smithsonian. There's a couple over in Europe, in Buckingham Palace. He happens to have one of them. I didn't have any idea, what the value of the coin was worth, but it's a little over an ounce and a half, beautifully engraved, and I believe it's somewhere in the area of $250,000 to $300,000 for this coin. I had never seen a coin, or I'd seen them, but I'd never been able to actually physically hold it. It was in a protective case where it had been graded by the PCGS, which is a professional coin grading service, and is really a one-of-a-kind treasure that you just never see. So gold is really something. You ought to have a little bit of gold and silver, no matter what happens, especially with terrorism the way that is now. And the real terrorism, folks, was brought to me the last few days by my wife, Sarah. She said there's really one way to take it all down, and that is if they shut down the internet. And if you stop and think about that, folks, that would be the ultimate terrorist event, because it would stop the cash registers from working. The mail department would probably go crazy. The Amazon would probably go to 30 cents a share. So we got to be really careful that this cyber terrorism doesn't get any worse, than what we've got going right now, folks. It's bad enough, and I think that part of the internet is very, very evil anyway. So we've got to be really careful that they don't allow something to do that. I did see the movie, The Interview, and boy, I wouldn't even waste $7 on that. That was an absolute joke. Why Korea got excited about that? They didn't see the movie, otherwise they would have just laughed about it. Hollywood, that was a real bomb, in my opinion. They did a great way of marketing it, because as soon as you tell people they can't have something, you know what happens. They want it even more. Anytime you've been around a 3-year-old, you know how that works. So that's what we're watching. We got stocks in a major sell here. As long as we hold up today's lows around 2015, 2014 in the S&P, we should still get a little bounce. I believe we're still heading lower, but we'll see what's happening. So live every day in an attitude of gratitude, and may God bless.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.